All right, Simon, thank you so much for being here with me today. Can you please talk to me about the original opportunity or pain point that caused you to create your company, Relea.ai, please?
Thanks, Henry. Thanks for the opportunity. The pain point was personal. Our family have been in real estate investment for a long time, over 20 years. And so we've been actively, in these workflows to sort of develop investments and so on. And most recently, I was trying to sort of develop and invest in a new market to me, which is Ohio. And I thought that it would be relatively easy to meet my goals, for that investment in that market, which is, to sort of achieve cash flow based on my investment. But in practice, it was a lot harder. I found like the market was more of a seller's market than I expected. People expected kind of Chicago prices in that state. And so it got me to have to, let's say, analyze a lot of properties and do this underwriting over and over again. So underwriting is kind of that fancy word for like looking at an investment and like being able to determine whether it's good or not. And so I was constantly having to, pull county information, pull census data, look at rental comps, look at the listing, pour through PDFs and so on, and then praying that I would not be missing something really major that would cause this investment to go upside down, over and over again. So literally hours of work every single time, and always like potentially making mistakes. And so the technologist and nerd in me just started to kind of cry out in anguish, and I decided to start to chip away and put together technology around that. And over time, I realized, hey, others could benefit from this, and that got me to productize all of this. And this is what led to Relea, which we just recently launched.
Can you break it down for someone that doesn't know anything about, real estate investing from A to Z? Take as long as you want, and also just explain how your platform would solve those pain points that they would have without your platform.
Yeah, so as I sort of alluded to, when you consider getting into real estate, making an investment, that this process called underwriting, and that's just a term that means, kind of looking deeply at this investment and analyzing it to be able to understand its return, either the current return in terms of cash it generates or the appreciation and potentially like the outcomes from the resale of that investment. Now, doing that process involves looking at a lot of different sort of sources of data. You want to sort of look at, the asset itself, the current condition it's in, what's likely to be its state based on the date it's at, last time it was renovated, or its age, the income generation potential, and so on. So there's a lot of different sort of, materials and data that you have to bring to bear. And what Relea does is it automates all that process of getting all of that data, together to be able to do a deep analysis of it and then formulate, your full, operational statement, your full financial statement, calculate metrics of return on investment and so on, and also assess risks from it much faster. And so you're able to sort of get to a sound, let's say, offer decision or go, no go in minutes instead of hours. And so that allows you as an investor to be more competitive in the market and capture opportunities that you might not be able to otherwise.
So one of the things that a lot of real estate investors are told but don't understand before they get into the business is that a lot of the time it's mislabeled as, there's a lot of this propaganda around landlords, right? A lot of landlords are exploitative or whatever. And
Mm.
the reality is that real estate in general, unless there's a serious catalyst, is generally it's kind of a marginal business, right? And that's why the number one thing I've heard from people who I've talked to who bought a house and have tried to rent it out, who've tried to get into this business like you're talking about, they start small, is the property manager. How does your platform like handle that? Because I heard from so many people who's try to start, like you talk about, family businesses and real estate, and they're like, man, I can't pay, you know, 8% of my yearly rents just for some guy to not even care and really manage this, and I'm getting no value out of it. and I have to do everything anyways. How do you think about that on the platform?
Yeah, Henry, that's a really great point. I would say personally, we do engage with property managers simply because practically, like, it's hard for us to be able to get to our properties when they're in a different state and so on. So for a lot of investors, it's kind of just maybe a necessary like partner that you're going to have. There's more and more solutions, and I anticipate more disruption in the space in the future where you might do more remotely. So I actually want to be testing that. I'm playing with this myself. The thing that Relea will do upstream of that cost is help you. There's a term in real estate investing where you sort of can sort of basically make your money upfront. Like when you acquire, like when you buy it, you make your money. Is basically essentially like oftentimes the larger sort of gain you're going to have is how you sort of look at an asset, let's say, and how you negotiate it, how you're able to assess its potential, right? And part of one example of that is to be able to sort of look at let's say a multifamily property and assess that its rents are under market such that you'd be able to, being conservative, looking at the median rent in that specific area, immediately sort of like raise the income generation potential of that property. So this is something Relea will be able to do and inform you upfront. So you're able to sort of get into an investment and essentially sort of value add into it and kind of build on that potential. And this is where a lot of the return for real estate investment can come from,
So,
upstream from, let's say, the property management.
so earlier I called real estate kind of a marginal business, but all businesses or investments are marginal for average people because they talk about they make mistakes. How does Relea, like you talked about, it enables people to get that um capture more margin and increase their investment and not fall into those traps that normal people do, like you talked about, where they kind of pay too much and not as good as the market. So can you explain that? You were talking about that a little bit, how maybe it could help them misunderstand an asset
Yeah.
being undervalued relative to its cash flow.
Well, two things I want to bring up. Like one is a continuation of my previous point, which is in certain cases you're going to go in, let's say, into rental property, and you're going to see rents that are in place and they're simply not sustainable by the market. So I've seen investments like this, unfortunately made mistakes to kind of walk into and acquire investments like this myself. But essentially, you're looking at a rent that looks really good, based on the rents that, like are currently in place. But then like the market won't support that. In other words, like it's way above the median on the market. So what happens then is you start to get tenant churn and like your residents are leaving and new ones are coming in. You can't re-rent at the same income level. And so your income kind of takes a step down. And as an investment, basically that's the value of that overall asset that's going down by a specific ratio at the same time. And so oftentimes you'll sort of maybe see a little bit of a sometimes it's intentional, I would say, sometimes it's not, but the seller is trying to pump up the kind of income generation short term before a sale, right? And so if you're able to sort of like, okay, normalize this in the market, okay, that's not sustainable. I can sort of discuss this and try to bring down the price of the asset or walk away, right? I think that could, like, that's a big one, like you would avoid as a mistake, using a tool like Relea. The other side of it is, when there's major, let's say, um, core mechanical pieces of the property that are sort of defective or are overdue in terms of their age. Let's say the roof is overdue, or your HVAC system or your electrical infrastructure is dated, or the plumbing. That's oftentimes harder to assess just by looking at the price and looking at the rents and things like this. And so oftentimes a mistake that people will make, including myself, is to sort of take a property at face value and you're looking at it and it looks really attractive. Hey, it cash flows and it's a great return, but then you kind of neglect to include, well, it's going to need a new roof, otherwise I won't be able to get insurance, or it's leaking already, or the HVAC is over age and whatnot. These costs are kind of costs that I sort of categorize as like more urgent and high priority, and that should be accounted for as part of the purchase price. And so I call that the CapEx, the urgent or high priority CapEx. So I run a sort of an analysis to estimate what those items might be specific to that investment, so that you can kind of like compare that one more apples to apples compared to something that has been sort of like brought up to the standard. And so sometimes that one that's been renovated might have a higher listing price, but then overall, when you start to include all of these, like costs, and we all know that construction costs have been sort of escalating and all of this stuff, and it takes a while to do these projects. Even though that higher priced asset looks maybe less appealing at face value, it's actually the most competitive one when you start to include all these other facets. So that's another example of a personal mistake that I made, not considering this properly. That's included, in Relea and taken care of.
So it's been people have tried to digitize real estate for decades, and part of the problem that they've run into is just like what you talked about. It's that when someone tries to like digitize bad plumbing, like I've talked to so many people who bought $100,000 house, it was a long time ago, but they bought like $100,000 house, and then they had a plumbing problem, and it's $30,000. So, right. And so how do you, can they're over there and they're saying, hey, I'm looking at the return on this and digitally, oh, I bought the house digitally. I paid 100,000 for it digitally, but then they get hit with a
Right.
$30,000 bill. How is it possible to digitize it? How do you think about that? And what is your platform? How does it handle that?
Yeah, we are able to, in the example that you bring up, right? Like if, let's say, oftentimes what you'll have is the listing doesn't mention the plumbing or doesn't mention the roof. In that case, you can kind of make an assumption, well, if it had been renovated, it's probably something that they would have noted because it's a plus point, right? So you can kind of make an assumption that it's probably the original plumbing or something that's kind of old, right? So based on factors like this and factors like the construction date and so on, you can start to estimate, well, statistically, it's likely to be something like a 20-year-old plus roof or something that's overdue replacement. And based on that, you start to include it and account for it, right? And then to the other part of the question is what's the cost for this? So this is where, you can kind of like mine information that's available publicly, actually specifically to this kind of, the kind of gap or the kind of like repair that would need to be done. And what we do is we produce a kind of a like a little bit of a range, like a ballpark for that potential repair, and it's included in its own sections. You can kind of check it, uncheck it, but you have it at least on your radar as you're considering it. So it's not something that it's totally like you're sort of like off of your consideration sets. You can kind of like decide, well, this is probably a big factor because let's say for Chicago it's really old construction, all cast iron sort of like pipes and so on. It's going to be pretty meaningful versus a newer construction where it's less meaningful. And so that can enter your sort of strategy where you can engage a seller. Hey, can we talk about reducing the price accounting for this? Or often you will just do an inspection, right? Not often, you'll do the inspection as you get into the deal flow pretty much 100% of the time. And so what you can do with Relea is you can take the inspection report and sort of import that onto your existing listing. So the listing is kind of like a living thing where you can add more sort of documents like an inspection report or an operational statement or a statement of expenses and whatnot that you get from the selling party, and it'll refine the analysis, right? So so in that case, you can the inspector will sort of make a deep sort of check on the property after you sort of cursory check, and you can kind of refine your underwriting based on it. And kind of going in to your point, it's just going to be something that changes the ROI function for you. And oftentimes it's about sort of going in with your eyes open and still penciling and still being supporting a good investment for you, even if you have to change the plumbing. Right, it's kind of just changing the variables to make it still a good investment. But then you have to kind of manage it and take some time to do it, and find a vendor that actually sort of would kind of fit your budget. But at least you can kind of go in and say, hey, I'm aware of this. It's a big cost, but I can still make that investment work.
I'm just wondering about this. So when we think about real estate investing, one of the first things that comes to everyone's mind is the worst places to do that, right? And so, how do you think about like, does your platform, like, how do you think about like, do you, will your platform, how do you think about that? Like, if someone doesn't know anything, they're like, oh, New York City, I like New York City. I would like to buy something in New York City. Like, how do you,
Yeah.
yeah, what do you think about that?
One thing I like about Relea is it'll sort of take into account like market factors, but also factors that have to do with the governance of real estate, landlord tenant rules and regulations, rent control measures, and things like this. And those things would get flagged. If you run an investment from Washington State right now, they'll sort of flag the latest measures on rent control as a risk. So for you to sort of to be accounting for. Is it a blocker or not? It's really a matter of the overall sort of like set of other assets that are qualities that this asset might have, but at least you'd be aware of that. And so it doesn't mean that it's impossible. Like to your point, right? It's something that can potentially help you get past like the common understanding, hey, this is a bad state, or I've heard this and that. Well, you can actually look into this investment. Some investments would probably still work, in some of these locales, but at least you'd be aware of that. And I would say personally, I would try to sort of diversify, and that's part of the reason why we've expanded to multiple different states. You have a little bit of different. Maybe some states are more landlord friendly. Some states a little bit more like, hey, you'll have more risk on that side, but there's other qualities to it. So it's a little bit. There's always pros and cons on each state, but if you get diversified and if you are thorough for every investment that you're considering, I think you'll end up ahead, over the long term.
The number one barrier for a lot of people who try to get into real estate investing is that they're scared of doing it, like we talked about, in a
The
different
unknown,
state.
right? Yeah.
And
Yeah.
so, also because like in the San Francisco Bay Area, any kind of property is $1 million, and that's so much for an average person. Then they're like, do I want to go to Texas? I don't live there. How do you sort of like, but if you want the best returns, you kind of have to go to where the best market is. So how do you kind of handle that? Because if someone lives and works in Portland, Oregon, how does your platform help them?
Yeah, so the platform supports you, bringing in listings from any location, right? So you can kind of compare it, any sort of investment from any state, and then you end up with a sort of like an apples to apples sort of comparison, right? So you can kind of like compare something, in California to something in Illinois or Ohio, and sort of end up with the sort of, bottom line, cash on cash return or cap rate, or let's say long-term return, right? For that market. So it kind of takes the local factors a little bit out of the equation. So you can kind of, one way to approach it would be uh, to engage, with, start to sort of like meet with brokers in different areas and start to learn about the markets, do your own research, and then start to check listings in multiple, areas using a tool like this, and then do the analysis, kind of like this analysis that normalizes these different markets. You can compare them with each other. And then you could kind of like proceed with that. Personally, I like to do a research, like a market research ahead of time, get a little bit of upstream of a tool like this. So the tool here is trying to focus on, hey, you have a property that you're considering. Let's sort of do a deep dive on it to sort of like get to the go, no go, and whether I can support it. But then upstream of that, there's a pretty deep like market and economic analysis, property analysis. You can kind of like do it to sort of triangulate for the factors that are important to you. Personally, it also is something that's sort of appropriate to the stage that you're at for your sort of real estate investing journey, right? Typically earlier on, you kind of want to plant seeds and you want to get more appreciation, right? So it may be a little bit less about generating cash, and maybe later on when you're maturing in your portfolio, you want to turn that more into a cash flow producing machine. You want to maybe deleverage, and it's less about the appreciation at that point. You want to get solid markets where you can kind of like get rents or high sort of return in terms of rents, right? So it's really about like what what your objective and what your strategy is. Like the term is the buy box for a given investor. And so the tool is very flexible to the kind of like objective you would have.
So a lot of these tools that people have been using for, digitizing real estate investing have been built by like real estate people, right? You're a technologist, right? And so, like we talked about off camera, a lot of people try to have bits over atoms, right? Like they try to maybe dip their toe in the real estate industry when they make a little bit of money, and then they kind of get burned, or it's kind of hard for them. It's more management than they thought. You
Right.
have an experience of both worlds. So what unique angle does it have, do you bring as a technologist? And how would you explain it to someone who's an engineer, a computer scientist, and like, what are they missing out on?
Yeah, that's a really good question, Henry. Like, there's many different ways. Maybe I'm kind of thinking about addressing it. One is I'd say like the focus of the tool. When I sort of first designed this and I thought about this case, obviously it sort of was born out of my own selfish like needs and like my own sort of like personal point of view on real estate investing, right? So there's a little bit of, let's say, a core bias of the product direction that starts with, hey, what I needed personally, right? Over time, I then started sort of expanded the aperture a little bit and start to really think about the different, I call them personas, that could be interested in this. Investors, small investors, professional investors, brokers, lenders, general partners, and so on. So I ran an early access test where I used my network and network of networks to get people in every category to sort of like jump on a call with me and talk about their own process of underwriting, talk about the tools that they're already using, et cetera. And so that really kind of helped me sort of validate or invalidate my assumptions and biases. And so that kind of went into the sort of iterations that led to the sort of the recent launch that we had. But basically what I kind of realized along the way is I kind of realized that we sort of like Relea has a positioning where we are trying to sort of like, I feel like, empower the more sort of sub-institutional investor, right? Like more like people like you and me, less about like larger professional investors. The reason is, a lot of these large investors, they often have, at least right now, existing very expensive licenses at the enterprise level for tools like legacy tools, right? Uh, for underwriting and that provide a whole different set of other services. They kind of want to be suites, kind of like the Salesforce for real estate. And so when you talk to them about, hey, this part of the process here, now you have like a more modern, advanced tool, sometimes it's a little bit of a tougher sell because they already have all of that existing investment. They have that kind of commitment bias, and so, uh, but and also the pricing is pretty unattainable, like for the common investor. And so I kind of saw that there was a bit of a window or a gap for a tool with much more approachable and affordable pricing to still bring a lot of value and power, to allow that class of investors to compete. And so that really started to kind of refine the target sort of market and persona for the tool, towards more like the investor and the broker, uh, kind of personas. And so since then, it's sort of been a little bit more on that level, not really trying to replace super sort of like expensive enterprise type financing that's used by massive sort of like real estate investment family offices and whatnot, then kind of just really empowering. And then going back to your question, I think this is where our tool can have a bit of a quest to sort of make real estate more approachable. And so almost like a Carfax for real estate, where you can kind of run any investment through and get an independent signal on it, like a very quick kind of deep dive, and that the layman can understand. Oh yeah, I understand all these costs now. I wasn't aware of all these risks, and this is the kind of return I can see, and I can compare that with other potential returns of other asset classes I could put my investment dollar against. And so that's what I'm sort of hoping, maybe aspirationally can happen as people start to consider real estate, that normally wouldn't have considered this before because of all of these blind spots, and it seems overwhelming at first, like you said.
I'm just wondering, this is so can you please do this for me? I remember a couple years ago I was talking to a woman. Her mom had given her a house in Seattle, right? Nice lady. She's like 28 years old. Mother had given her a house in San Francisco,
Hmm.
in sorry, Seattle. Her mom said, "Please rent this out. Like use it as passive income, not passive income, but use it as a stream of income." The woman said to me, she said, "I don't want to rent this. Can't I just sell this house and give it to someone to manage my money for me? Why do I have to be, handling the plumber, handling the this, handling that? The water heater broke. There's always problems." What would you say to that person about what would you just take a couple minutes? What would you say to them about like that's what a lot of people believe. They think they can sell their house, like they get a house from someone, they want to sell it, and they think that someone can manage the money for them. How would you educate that person right now saying no one's going to take care of it better than you? No one's going to care about your own investment better than you. What would you say to people who think that they can just outsource that? Or what are your thoughts on that, please?
Yeah, no, those are there's a bunch of questions in there. I would say it kind of starts with what your objective is or what you need. In this example, do they need all of the money out
No,
for a
no.
different,
They just want
right?
an investment, the cash flow
Yeah.
stream.
Okay. Yeah. So I'd say like step one is to sort of see if, the rental income that you can make from the property can cover all the costs, right? So you can kind of like run the property, for example, through Relea and get like an informed, from the current rental market, from all the main rental marketplaces, Zillow, Apartments.com, and Zumper, uh, like median of the market rents local to that property of a specific same type. So you get some confidence. Okay, this is a real estate like rental amount I can get right now, and then what the expenses are, then I'm likely to be able. In this case, this example, I believe that they would be aware of what the expenses are. But like, let's say she wasn't sure, she would also get an estimate of what the property tax would be based
But
on the valuation and so
sorry,
on and so forth. And
sorry to
then
cut you
together
off.
would kind of cover the cost or answer that question, yes or no.
But also, like, sorry, I'm just trying to break it down for people who don't understand. People like how you what. So, a lot of people have no experience with any kind of investing, and then they want to get, and then they realize I need a return. How do I do that? Real estate investing. And so, for people who have no experience, who just thinks like, what would you say to them about real estate investing versus whatever she'd want to do, put it in the stock market or something that they don't understand? You know what I'm saying? Because people are
Yeah.
naive, they don't know anything. Like you've been doing this for decades, as you've talked about, right? And so you've learned. And so someone who just thinks they can sell a house and that some guy's just going to send them a $1,500 check every month, like how would you kind of educate people who are kind of don't know anything about this stuff?
Well, overall, Henry, the one thing I would say is that real estate ownership is one of the two types of income that the IRS is biasing in favor of in the US. So there is many tax advantages to real estate ownership. The other kind of income is business income. There's a lot of tax advantages to incentivize owning and running a business. Same with real estate. And so real estate also allows you to leverage your money and get into a bigger investment that you would otherwise be able to just sort of going off of most other asset classes like the stock market, right? So you can kind of, if you occupy the property, you can leverage your money even more. You could potentially put 0% down, or you could put just a very little amount of money down. And then that allows you, if the property supports itself in terms of its rent amounts, expenses, then you start to sort of like gain from the equity or the appreciation of the property over time. And then you get meaningful, advantages, and those advantages have been compounded by the recent big beautiful bill by Trump, where you can like essentially depreciate the property, which is a process where you take a big tax loss against the income, and that allows you to essentially shield the income that generated by the real estate from taxation. And so you
So
get that cash flow income that's shielded or at the same time.
how much of a difference has that bill made in terms of actual cash flow for real estate owners? Can you just explain it?
Well, it's very meaningful.
Like basis
And
points, like 1% a year, half a percentage. What do you think? Good,
Yeah, a
just
good
guess.
question here. Honestly, I haven't worked it out. Part of when I'm planning for Relea is actually a tax module where you sort of get a full estimate of that. So I'll be able to sort of be much more sophisticated on that side. But I'll just tell you, like, this is a process that we do for every one of our investments, and you basically our most recent investment. We're going to be able to to do a like two $300,000 tax write-off, from it. And because we're in a special situation where we're actively managing the real estate, so we have meaningful active participation, where we're able to offset that loss against the income, but also my wife's W-2 income as well. So I would admit this is a pretty unique situation that maybe is not available to everyone because many people will be employed and so on. But like um, the the tax benefit from the accelerated depreciation from the Big Beautiful Bill stays in the bank, right? So even if you don't use it all in 1 year, it'll sort of like be available for you to continue to offset that property's income or all of your property's incomes in the future. So it's advantageous for that reason as well. So we have example from a portfolio. We have that kind of like accumulated sort of loss that's still there that's able to help us even like years down the road. So that's a big part of the advantage of real estate ownership.
Can you
I'm not a
talk?
tax expert, but that's a big one.
Can you talk about how what Relea does and solves problems where if someone uses it versus if they don't use it? What problems does it solve for them?
Well, I would say it's uh, it's really allowing you to move much more confidently and much more quickly through to an offer potentially for an investment, making you more competitive in a market like today where the good investments will go away like very quickly, right? So instead of like you taking hours to analyze the deal, you can take some minutes and kind of engage and get the seller's attention and start like your process of due diligence. So that's a big advantage. And kind of related to this and is being able to sort of like gauge the property's risks, gauge what the due diligence might be. Like factors are not as easy to pick up on just looking at a listing. All the factors from the listing itself, but also from the market or the regulations around that market. So kind of getting a quick take much faster than it is before, so you can be more confident um, to sort of step into this beautiful world of real estate investing.
What red flags would it pick out that otherwise, without using it, that someone wouldn't see?
Yeah, I mean, there's one big one is about property taxes. So oftentimes, well, almost 100% of the time, when you're looking, let's say, at an investment property, the seller will report what they're currently paying for property tax, and commonly that's the number one expense for an investment, right? So that's a pretty meaningful line, but they're telling you what they're currently paying based on the valuation that's been assessed by the county that oftentimes is basically behind the current value of the property. And so what often, ends up happening is, you're making an acquisition that resets the value because the county will pick up and catch up to the value on a sale. So it's kind of an event that resets that valuation. And so then there's variance and how quickly, a given county will apply that. In many cases, they do it almost in real time where the next assessment is stepped up. But basically, that could be like a huge difference, of tens of thousands of dollars, for that investment that maybe like was cash flowing a little bit, you're feeling good about, and all of a sudden this could be upside down. And so what Relea does, it's a little bit conservative. So we'll sort of really understand and work out what the tax, methodology and reassessment, sort of cycle is for the county that you're going in. And it'll calculate the amount that you will pay after reset. So it's kind of like a bit of a worst case scenario, or like the eventual amount that you would pay for taxes for this. And so you can kind of get a sense, well, if everything pencils out, including this tax reset, I'm in great shape. So it's a little bit of a major blind spot that you're avoiding. Again, one more of my previous mistakes where I didn't quite properly account for that in the past. It's just one example of a blind spot you would, skip or miss.
Why do you think people in technology are so hesitant to get into real estate?
Well, actually, I I know a fair amount of people I have in my network that are real estate investors. When you look, but I'm not going to dispute it. What I would say to answer the question directly is, I would say, for a lot of tech workers, the thing that's at the top of their mind is, let's say they're working for a big public company, right? It's going to be the performance of the stock of the company that they work at, right? And then by extension, the stock market. So that kind of just, you know, it drives a little bit of like a, hey, this is the focus that you have. Like potentially there's a meaningful amount of your, like wealth that's going to be directed into that. It sort of kind of drives your attention, right? And so a lot of and people get busy and so on. So to kind of like, unpack all of this and be interested and like be willing to switch your focus to a totally different asset class, sometimes it's something that just looks too overwhelming to, like a worker in tech, like working in tech typically pretty busy, right? So I would say anything that makes that easier, more approachable will help. It's just getting people warmed up and feeling more comfortable walking into this kind of investment. But it's one part of the process. I want to be honest that real estate ownership, like even just a single deal flow to drive an acquisition, there's a lot of different steps to it. There's definitely it's not going to be free even with a great tool in the middle like Relea. That helps one part of the process, but it's an industry overall that's ripe for a lot of disruption, in my opinion.
Give us like 2 or 3 examples of how someone using your tool would avoid problems or get like what would it do for them and help them? Can you just give 2 or 3 examples, like real examples, tangible examples that you've seen?
Yeah. Well, one example is just be able to estimate the cost of utilities, right? So if you're going to in the market, you don't really know, hey, how expensive is water in Texas or the Midwest, or what about, electricity prices and so on. So those are meaningful sort of like costs that you would take on in a given year, but you have no idea, right? Like you potentially could put like, oh, I'm going to put like $100 a month. Well, that could be totally inappropriate for the next market. So just getting realistic estimates for all of the operational costs for that investment in a new market is a big one. Like I mentioned before, being able to sort of like pick up on gaps and pick up on blind spots, such as the tax reset that you might totally not sort of consider, just taking the seller's materials at face value is a big one as well. Overall, it's going to assess the data that comes from the seller. And sometimes, based on what we see, we'll use that figure, but a lot of the times it's going to be challenging it. Like insurance rates would be another one, good one. This is another big cost that's sort of concerningly been increasing for investor quite a bit, especially with states that have a track record of natural disasters and whatnot. So, but overall, it's kind of driven that cost up for a lot of markets nationally. So insurance costs, what does that look like for that area, for that kind of like property would be another big one. And then, another example I can bring up, when you start to look at certain investments that are mid-size, I was talking about, let's say 8 to like 20 unit properties that are walk-up, multifamily properties out there. Oftentimes what the seller side will have is like a rich PDF. They call it offering memorandum. That's maybe like 40 pages long. It's got this nice production value to it, pictures and so on, and a lot of facts and a lot of data into it. But every PDF is going to have like a different structure, different format, like different place to kind of go find your costs of utilities or find like your rent roll and so on. So it's really kind of like you're trying to find a needle in the haystack. And amusingly, a lot of the time, these PDFs will have inconsistencies or yeah, I would say it's mistakes, but basically, like places that self-contradict, right? Like there's one example I looked at in the Chicago market where it declared itself on page 2, hey, it's fully occupied. And if you stop there, you'll be like, great, my 6 units are going to be generating income. But then you kind of go down to, I want to say page 25 or page 30, there's 5 of the 6 units, they're marked vacant on the rent roll. You're like, okay, great. Come on. So the examples like this. When you sort of lean more on the commercial side, like larger properties, like over 4 units, you'll get into this kind of dynamic where the information comes in through these kinds of PDFs, where a tool that's able to use like modern and powerful technology, like AI technology, like Relea, that's really good at doing content analysis like this, is able to pick apart those issues and kind of flag them on the underwriting and Relea, and so you can sort of like take that into account and avoid that mistake
So
or
I just
flag it.
so I just have like two or three more questions for you. I'm just trying to really understand. So here's the one of the other problems that people run into is that they buy a property. I'm just saying, for example, I don't know about multifamily, but I know about single family
Same
homes.
family, yeah.
And like there's an old water heater. The fence is totally like broken and collapsing. There's like trees that need to be cut. There's like so much stuff that needs to be done. So how do you incorporate that when you're trying to buy something? Because that's like a ton of money. And like you talked about, there's one person that bought a house I knew for an investment, and the roof was literally like 3 months from not being covered by insurance, and they had to spend like yeah, anyways, it was just like they were out tens of thousands of dollars. How you've been in this game for decades. What just talk can you talk about that?
Yeah, so the answer is we take that into account directly. So there's a specific section in the tool when you do the analysis. There's a property info card where we specifically pull out what I call the core mechanicals. And those are the big pieces, they're the most expensive and are kind of like uh, the typical areas of focus that you really want to understand when you're getting into a property. That includes the roof, the electrical system, plumbing, the HVAC system. So, things like water heaters and so on are also kind of in that category, although they're a little bit less expensive. And so, um, when you look at an investment, it's really important to understand that clearly. So, oftentimes, the state of those core mechanicals will be reported by the seller, but that's typically when it's a selling point. Yeah, hey, it's been like the roof has been replaced 3 years ago, or there's a new HVAC, this and that. What if it's not reported, right? Well, typically this is where you can kind of like assume, well, there's a problem, or it's not been replaced, or it's original. Then what, right? So this is a factor like we're deliberate about, and it's going to be flagged as a CapEx line, what meaning this is an expense that you're likely to need to do either upfront or like soon enough after like closing, that you should really think of it as part of the purchase price or as part of the price of the asset. And so, yeah, the answer is we sort of singled those things out, like those big ticket items. So that is sort of the first class sort of component that's reported in Relea.
So
And then also maybe to complete the answer, sorry, Henry, but um, then when the information is not reported, well, based on whatever information that's available, if you have more detail, then we can get into the brand and the type of the HVAC system and so on and so forth. But otherwise, you'll have some information. Well, okay, so if this is likely replacement, or if it's been replaced, let's say like 10 years ago, well, there's only like 5 years of life, maybe you should account for a replacement, or this is kind of like the amount that you would need to budget. So you can kind of like make an informed assessment of it, pending more information. So at least you don't start from scratch, or you don't start with no information, right? So you'll still know, well, statistically, this would be overdue replacement at this point. So you should take that into account versus, you got a bit of life for this one. Maybe it's less of a factor. So it's a lower risk.
so one of what would you say to a person who is scared about Like they're like they own two or three houses in Seattle. Let's say they live in Seattle, but they are uncomfortable about going to Texas. They're like, I don't know the plumber there. And then whenever something breaks at one of their properties in Seattle, they're there with the plumber, they're there with the electrician, they're letting them in, they're watching everything. They're so how do they make that jump? Can you talk about your own journey and how you did that and why so many people get stuck in their own local area?
Yeah. So the 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 recommendation I would make is to start building a team in that market, and the team typically starts with the your buyer's agent. Would start with the buyer's agent for someone like that. So this would be someone that's based in that market, that's able to and has experience working with out of state buyers and investors, and can kind of speak your language and most of like help you understand the opportunities there based on your objectives, right? And then when you marry that with a tool like Relea, you're able to start to sort of funnel some of these opportunities that your agent is forwarding through the tool, through the analysis, and over time you start to develop your own mental model and your own sort of understanding of that market. So you kind of become more sophisticated in the things to kind of look for and ask. And so I would recommend kind of spending a number, let's say, of months, looking at a lot of listings like this and like analyzing them and starting to kind of like, potentially like, um, you know, and put some offers out, like, looking in some of these buildings. I would definitely also encourage, doing a like a site visit, at least one visit to sort of get the lay of the land in person, like maybe going around with your broker that really is familiar with those neighborhoods so you don't kind of waste your time spending, like driving around by yourself, not really knowing where to go. Um, so, if you're a beginner investor, I think that could be really helpful. And then around that, you talked a lot about property management, but it's another team member you would start to kind of like want to hire, so to speak, in a new market. A lot of the time you can guide this from the broker. Like typically they have a very deep network locally of all kinds of vendors and all kinds of partners. But the next one I would, be wanting to, find and hire would be the property manager. And so I'll typically do at least 10 interviews, just kind of going over like a checklist, like, and kind of understand like what their, the policies are and how, whether that's aligned with my own sort of like goals and like my own sort of attitudes to, maintaining a rental building. And that actually will give me a lot of confidence and support, you know, my decision to invest or not invest in the market. If I find a really solid like property manager locally, like that could, because that makes a big difference after the fact, right? How frugally they're able to maintain this, how they can kind of like keep the tenants in place and keep them happy and so on and so forth. So that's pretty important.
I just have two questions. What's the biggest difference in property managers you've ever seen?
Well, I like to say that you will want to manage your managers. So it's not free. Well, you think, well, it's totally passive investment. Like you can leave it like really passively. For us, like all these years, like to be honest, sometimes we're way more focused on our own W-2 careers than investing, and we kind of let it ride, and you kind of get some return every month. But when you start to really kind of look into it in more detail, you will start to kind of build mechanisms around your investing to be able to track the performance of all of your rental units. Like step one is to sort of like ensure that you're kind of maximizing the rental income from these properties and maximizing the amount of like income you could be producing. And sometimes you could develop like paid storage, paid parking, like a paid sort of washer dryer room and so on. Those are sort of like ways to add revenue to the asset. And then you want to sort of start to focus on how efficient they are with costs, and their methodology to hiring contractors and how that works out, and what kind of costs they're passing on to the owner. Honestly, some of them, those, you know even though some things would kind of point to a tenant like breaking a part of the property, and that should be on the tenant to sort of compensate the landlord based on the terms of the lease. Oftentimes the property manager kind of just wants to avoid a conflict, and you end up with just being charged. And typically they'll sort of add a fee to the charge to sort of manage that thing to be replaced. And they're not really, disciplined on that. It's a little bit of least resistance path for them. So it's worth kind of just keeping a close eye on that, as you sort of transition from acquisition to operations for an investment like this.
Sorry, that just really piqued my interest. Do you think that you could eventually like have an AI model that would like monitor that kind of stuff? That instead of
Absolutely.
just underwriting, you move more into the active management, and then it would have info on. Yeah, can you just talk about that?
Absolutely. I think that's a real opportunity. I mean, it's a natural segue, right, from acquisition to operations. Also, not only to kind of like drive all the value adds and all the income generation potential, all of the sort of cost optimization sort of opportunities, reviewing everything that you're doing, but also to sort of go back to the underwriting and revalidate and learn from what you got right and what you got wrong in the underwriting, having a little bit of that feedback loop, right? For me, feedback loops are kind of like the number one most important concept, especially in this age of AI powered products. Every flow that I've designed, both in the product itself and in my operations, I've introduced this concept of a feedback loop where we're able to kind of learn and make the process better over time, and the technology lends itself really well to that, and your systems are just getting better and better all the time. And so this opportunity to sort of transition into operations would kind of feed back and I think make the process of underwriting better as well. I don't cover that yet, but that's a definite opportunity.
So for the last question I have, tell people, potential investors, potential VCs, potential customers, potential people want to use Relea. Tell them, take as long as you want. What can it do for them? How will it make their life better? How is it different?
Uh, uh, Good question. So I would say that I would direct folks to Relea.ai. There is it's really easy to sign up. There's a way for you to try it for free. There's a free trial. Just give it a try. You can even like just try your own personal residence to sort of like answer the question you asked me earlier on. Like, could I rent that? Could I make money? Maybe I could keep that property and relocate somewhere else and sort of like start building a little bit of my portfolio that way. So it's definitely something I welcome. So I would appreciate folks watching this trying the tool out, um, and and then sort of reach out to me for any questions, and if anybody needs help get onboarded. Part of what I really try to stress is making this a modern product experience that's really easy to use and no friction. So I spent quite a bit of time and energy making sure it's really easy to kind of put a property into the system. You can kind of like copy paste a whole bunch of text. You can give it a PDF, like I said. You can just put the web address of something in Zillow, Redfin, or Crexi, or even the listing that you get. So it should be really easy to sort of get like to use the tool and to sort of get that main product loop going. So I try to sort of craft or put some of my intuition experience as a product technologist of many years into it, just from my own personal annoyance with products that are high friction and just kind of make it hard for you to use them, right? So just focusing on that, making that a smooth experience for someone. And then in the future, I want to do more. I think that we're transitioning to a world where obviously um, the power of AI and the amounts of modalities that AI is able to kind of go in and impact will kind of be infinite. Like effectively, AI will not be like a single modality or a decision on, let's say, a vision versus text versus like a sort of like a voice input. Then all of these inputs coming in at the same time, so you're able to sort of like just have the more inputs, the better, right? So anything that can kind of like be compatible with that world and really present itself in a way that's really easy for AI to use, well, I think it'll be like to be honest, like a requirement. And I'm concerned about what I would call legacy businesses that started before AI, because it's a totally different sort of like mindset and viewpoint and strategy to developing the product and the market that is like 100% getting disrupted now. And I see it even for myself with this product. I'm very aware that maybe before long, maybe by 5 years, people might not even log into a product anymore. It's just be going through AI, and the AI will be ambient. It might not be like a text interface anymore, than just sort of like this ambient sort of thing that can kind of help you in a way that's most appropriate to your context. And then if it just the value that you provide will need to be able to be plugged into that context, and just in a way that's very flexible. So that's really fascinating, and that's really kind of part of the reason why I felt really passionate about doing this full time as opposed to continuing with my full time job, because of everything. It's such a disruptive thing and change that's going on, and I just wanted to kind of just do this full time and just experiencing it full bore, right? So it's I think we're fortunate to be part of this, and to kind of see it develop. Okay, yeah, no problem. So yeah, Henry, so just as a quick walkthrough, Relea. So when you get into it, this is the view that you're getting. It's a little bit of a dashboard view that shows you everything that you've underwritten in the system so far. So this is after the full analysis, kind of normalizing all the expenses, all the risks, the CapEx, what those sort of apples to apples sort of metrics are for these prospective investments. And then geographically, kind of see them and visualize them on a map. You can kind of see, well, sort of colored by cash flow or the cap rate and whatnot. So you can kind of see a little bit like how things are clustering, right? So if you're looking at different markets, that could be a useful tool. But it's sort of the high profile, sort of, or the high level overview. So when you click, you have a little bit of an info card where it can kind of shows you the metric performance here. But the real meat of the workflow happens on the detail screen here. So this is an example of a property that I've underwritten, say Columbus, Ohio property. And this is the full report. And there's different components to it, but it starts with the rent roll. So all of that information will be sort of analyzed, or from the analysis of all of the different sort of direct and indirect data sources that we were able to pull about this property. So in this case, we know that it's a multi-unit. These are the kinds of units. And we have our own proprietary sort of rent estimate model that is assessing 3,200 monthly rent for this unit based on 27 local comps. So those are comps that are not like unrelated, but they're very local to this property of a specific same number of bedrooms and baths and a similar size. So you kind of compare against apples to apples. So you have something that's under market, which personally I always like to see and have. And as you scroll down, this revenue will be put into this almost operational statement or P&L almost kind of form, where you can see all of your income sources. And then we model a certain amount for vacancy based on census data, and then the different expenses that you might expect. And one cool feature of the tool is every figure has this substantiation here. So you can hover and get the color on how we came up with this figure. So it's less of a magic number than, hey, this is how we would validate this amount in snow removal or this amount in pest control and so on. And, for some properties, it's just not going to put some pest control, right? It's only when it assesses, based on the dynamics and the location of this property that it might need it. And then you have, your deal metrics. So this is kind of like the meat where you really would see, well, how much is this cash flowing? Is this cash flowing at all? Is it a negative return based on, the amount of like down payment that I have? So all of these figures here, you can adjust based on your own sort of assumptions and your own sort of parameters, how much you're willing to put down, how long your loan will be. So everything we calculate on the fly. One thing that I did is, I'm using a direct calculation system for this kind of, this what if analysis. Any variable that you're changing is directly recalculated. It's all sort of like chained together with a dependency system. We're not going through and sending that to an AI system, right? AI notoriously unreliable and slow for just this basic math. So it's something that we're kind of using technologies for what the technologies are appropriate for. So as you scroll down, there's other parts of the report. In the interview, we talked quite a bit about the CapEx component. This is the section here, so we'll sort of estimate all the different items that it would recommend. And in this case, I sort of decided to uncheck some of those, but basically the analysis will come up with a list and a range for each item, and then it'll use the midpoint and include that in kind of the baseline investment of the property. So that's how we can kind of normalize, property that needs a lot of investment versus one that doesn't need a lot. So this would be in that component here. And then following this, you have your risks, right? So this is where a lot of folks actually kind of scroll down almost like right away. They'll skip through all of this and they kind of just want to see the risk, right? So this is where like things like we discussed before, hey, rent control or some risks here based on the age of the property is really open-ended. It basically looks at all of the data for this specific investment, market data, market dynamics and legislative, factors, and include that and take that into account, and then try to flag things for your consideration and classify the risk level. And so in this case, you have a tax reset risk, there's zoning, there may be some inconsistencies. So a lot of these factors is about bringing them to your awareness as an investor, so there's less blind spots, so you can feel more confident about, okay, now I kind of know what I'm getting at, and you know what, I can deal with those risks. Let's move forward, right? So I do feel that this is part of the facet of the tool that will make people feel more comfortable about real estate investing in general, moving forward in process with investments. And just finally, real quick, I do want to show that it all starts with this box here. I kind of wanted to make the intake as easy and low friction as possible. So you can basically like put anything you want in that box. I mentioned offering memorandums, like there's a PDF I'm putting in. I don't know if you quite saw it on my screen, but it could start with basically like that, and then it'll start processing, and you have this processing process where there's multiple sort of side sort of work stream and agentic sort of streams are analyzing the property, and the property then updates in real time. So you can kind of see that happen. We could kind of like wait here, and the property like will refine the analysis as this is proceeding. So that's kind of the basic sort of loop of the product, like getting the property in really easily, be able to get an analysis relatively quickly. You can see our rent roll came out, and then some other analysis, all the risks will be fleshed out a bit later. And then, kind of looking at it from the dashboard perspective, doing some more analysis from that standpoint. And just to complete real quick, part of the functionality I'm going to enhance more, and that's tied to my Pro license for now, is more, let's say, scaled and bulk type workflow. So I have a bulk import feature. I'm going to have a feature to automatically route new listings that you're getting from your email or using a browser add-on or a feed. So you can kind of consume just feeds of listings and do more of a systematic analysis in an automated manner, right? So you'll see properties come in anytime they're posted or listed. They can come into the system, get the full underwriting, and then what you can do is set up a quick notification for yourself, like a criteria, almost as if you're shopping for a car. You're waiting for that, that car you've been chasing with a specific color or a manual transmission somewhere nationally. Whenever it pops up, like alert me. So then you can kind of like get those things flagged for your attention. So if you're looking for something that is about any kind of criteria you can think of, like a certain amount of cash flow across everything that you're looking at across all the market, get those flagged to me so I can kind of like focus my attention on it. So I'm going to do more with that kind of pro workflow in the future. So that's a little bit of an overview here, Henry.